Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 18th of December. All right, now I just have a little look through the numbers. Now, the UK employment numbers came out. Now, a little bit of mixed data, like the claim account unemployment numbers a little bit higher, the rate a little bit weaker, and then the 3-month average earnings slightly weaker, ex-bonus slightly higher. So, bit hard to work out, but the overall right factor here is in the currencies. We thought we had quite a bit of resolution after the UK vote, but Boris is making it a little bit tricky, coming out with the hard Brexit. It's back on the table. Also saying, I want to roll it out. Like they want to get the break away from the EU by the 31st of January, but then trying to work out a deal over the course of the next 12 months, which is like confusing the hell out of the market. If I come across to the charts, sterling did not like it at all. And I saw this data out early. I mean, obviously, sterling's topped out at 135 on the election, now back at 131. I was mentioning this yesterday. This could easily drift back to 131 with that sort of spike up. That's what you get. Now, I saw this news yesterday around 132.5 about, waiting till the end of 2020 to get the deal done. I thought about getting short, but it was no real clear level. And I was sort of happy once it bounced sort of 50, 60 points back up to 133. But really, you can see here that sort of pivot level, the previous high, 132.25. Down through that was the break, or the straw that broke the camel's back, excuse me. So not as easy as you think at the moment where direction's coming from. And also, if I just bring you back to that sort of news page, you're trying to piece together, right, these geopolitical events. And they are hard. Now, Trump's coming out here. He's saying it's an attempted coup, right? He is crazy. He's probably going to try and generate some sort of revolution across the US if he gets kicked out. Just keep an eye on this as we go forward. This is hotting up. Donald, you've had some fun. I think it's time to go. It would be good for the markets, if anything. And then we're going to sort of try and fit in all these other economic data releases. So if you do come back to the charts at the moment with, funny enough, you look at today's news, there's nothing about the US-China trade deal. And Aussie sort of just drifting lower. The Kiwi business activity numbers yesterday were slightly stronger. It sort of just pop up 10 points, and it's now drifting lower as well. Dollar yen, no sign of any sort of major move there. So the market's waiting for some sort of clarity around this US-China trade deal, if it exists or not. As I said, I still think Trump will knock this thing over and use it as a political tool to try and offset some of the domestic issues he's facing. Euro cruising to the sideways at the moment. We've got a couple of good levels here, so keep an eye on Euro. It is big time in the game. We just need a bit of a catalyst to get this thing moving. Obviously, sterling, there'll be a lot of stops under 131, sort of 90, I'd say. So just keep an eye on that. But this is all, once again, geopolitical driven. So it's pretty hard to sort of see. Now, overall in the big scheme of things, dollar CAD is drifting lower, but don't forget we are seeing some decent bounces here from like 131 the figure up to 131.85 and then sort of back in the range. So it is going down, but it's not very orderly at this stage. Keep an eye on oil above $60. So what do we got with the currencies? What does all this mean? Well, to me, it's back to like a tricky situation. Like we don't have any major, clear direction across the board. The dollar index is just sort of cruising sideways on a couple of time frames. So the pairs to me to really be focusing on dollar index, euro, and sterling. They got a bit of clearer sentiment at the moment, and that's where if you come across to the upcoming major FX events, this is what the pairs that actually have some data coming out as well. We've got the German IFO numbers, obviously UK CPI, Canadian CPI there as well, and then back up with Kiwi GDP. Right, that's all she wrote for today. Sterling and euro. Well, sterling, I mean, this could turn around, at the drop of a hat if Johnson says something positive. So just be aware of that. Dollar CAD CPI is definitely a very high impacting event and will have some influence on the market if there's some variance in those numbers. German IFO business numbers, well, you're going to need substantial variance to get it moving. And with euro sort of flatlining at the moment, it's pretty hard to see that happening. So overall, next 24 hours, I'd say the Canadian CPI numbers are the ones to be looking at. And that's a little bit of a shame because we don't really have a lot of trend strength on dollar CAD at the moment. But this could influence the Bank of Canada, and that'll have some overflow. All right, guys, that's pretty much it from me. The markets, traders are starting to wind down for the this holiday period. And with all the news sort of being still geopolitically driven, Trump's impeachment, the pound, hard Brexit, deal or no deal, it is pretty hard to see where the next bit of momentum is going to come from. Okay, just keep your capital management in check. So if you are trading, at least you won't be taking any significant losses. And we'll go from there. All right, guys, have a good one. Cheerio.